Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, goldman-sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. So as we begin to look at the week that was, we see a couple things. First, we see that the Dow Jones, the Nasdaq, and S&P 500 all fell for the week. Now keep in mind, the Dow Jones did make a 4-year high this week, so we did start off the week rather well, but with our jobs number, we ended the week down. Basically down about 2.4% for the week, which has been the biggest weekly loss for the S&P 500 this year. With the weakness in the stock market, we saw the dollar gain for the week, and with the strength in the dollar, we saw gold down for the week. Now news. Not a lot of news this week besides that jobs data. Overseas, the main thing people are watching is that oil fell, good for our pocketbook, due to the speculation that Iraq was going to pick up some of the oil production. And that really was bad. There wasn't a lot of data on the corporate news. We really don't have a lot of corporate news. The momentum is building for the Facebook IPO. I believe it's on 18th, so not this week, but the following week. So there's a lot of pickups. So this week really ended up being about the jobs data. The numbers came in lower than expected, 115,000 versus 170,000. Unemployment did drop down to 8.1 from 8.2. Of course, a lot of that has to do with people not looking for work anymore. And so that really was the driving factor. ADP this week did show a correlation, and so it gave a hint that the number was going to be weaker than expected. And so that's when the market really turned. And then, of course, on Friday, it really gave up the ghost, so to speak. So there wasn't a lot going on this week, and we continued to hover and consolidate at these 2012 highs, but again, we're not seeing that momentum. We're not seeing the volatility. We're not seeing the volume to keep us going higher. And now that we're through the major catalysts with regards to earnings, now all we have are our economic data. You can see this week we're light on economic data, both nationally and internationally. Friday we got consumer sentiment, but we got to wait for Friday for that. We do have some European news this week as far as the election for France and Greece, but that's really about it. So we're really light this week on news. And so how's that going to affect? We're already light on volatility. We're light on catalysts. How's that going to affect the market? Let's pull up the charts and take a look. All right, so here we are looking at the dollar. And what's interesting about this and what we talked about last week was that here we were last week, and we said that this is basically, the defense point here. We talked about these wicks in here, and that if we're going to hold on to the 79 support level, we needed to go up right there, and we did exactly that. Got ourselves back into this range, but keep in mind, we are making lower highs, so this is where the sellers may come in, but once again, we have strength in the dollar, weakness in the Eurozone, and that may lead us into going a little bit higher. But if the trend's going to hold up, we're going to pull back. We're really snaking around 79. That's my point. And until I see some break of that trend, I'm not really seeing the trending yet. But there's hope there. We'll see. We'll just see what's going on here. Just to give you a rough idea of what we got to get above to really see the dollar take off and get back and retest the highs. So strength in the dollar, as we talked about earlier, what led to weakness in gold. And as far as gold is concerned, what we talked about is that 1660 price level, snaking around that. We're snaking around it, and it's being resistance. Where you can see that although our ultimate support is around 1600, but we're also seeing support in the 1620 price level, which is where we are. So we're really seeing a snaking process, and just like I said for the dollar, I don't really see that trend to really start buying something into. I really need to see a breakout of this range. You could draw a wedge here to really hope to see that this will start to move and start trending in one direction or the other. Woohoo for our pocketbooks. Got a little break at the pump, not that much, not as much as sure a lot of us want. But the good news is that not only are we back into this 96.102 channel, that we broke the swing low the last time we got in here. So we're coming up on a 200 moving average. Hopefully we'll stay in this range, and even better if we can break below that 96. Okay, here we are looking at the S&P 500 on a daily chart. And what's interesting, besides seeing, we spent so much time in the overbought, and now we're starting to come down and get into the oversold level here, especially on RSI. So Cat6 and MACD have more room to go lower. But what's interesting, though, again, when we look at this sideways motion from price action here from basically March, right about March, you can start to see we really started going sideways, and now we're testing the bottom of that range with our support here around 1367. So what's interesting is that you can make an argument for a double top now being put in here. So we're starting to see some reversal chart patterns is where I'm headed. You can make an argument for a weird looking inverted head and shoulders, but definitely deformed, not picture perfect, but definitely a double top. We're seeing our first real defined lower high here. So, and again, if our uptrend line, this line right here is our uptrend line from October, from our lows, and we clearly have broken that this week. Is the tide turning? As we said it before, we're sideways price action, we'll have low volatility, but more importantly, what's our catalyst to keep this momentum moving higher? And that doesn't mean that we're going to have a 2009 fallout in the market. Any pullback is healthy, and we spent, as I said, so much time overbought. There's nothing wrong with coming back and getting a little breather and moving down. And for those people who are looking for a way to get in, and you only believe in longs, this might be the time. But for those who are looking to short, we certainly see some evidence that that is in. And the reason why I say that for our late people in is that with this neckline, with this support area right in here, we're really going to start to see some movement down. We also broke the 50 moving average, which has been holding up. Really the next point to watch here is our swing low right here, which is around 1345. That's the next price level. If we break there, then there's definitely evidence to come down and test the 1300. Moving on to the weekly, you really can see this sideways price action that we've been talking about here, and really see them moving sideways. And we are now on a weekly coming out of that overbought. But what I really want to get to is the monthly. And you really can start to see when I say that the sellers may start to feel comfortable, is that we have our May, and I know it's only the first week of May, but we're starting to set up our this being more of a evening star doji, and now the market coming down from there. So the month is really starting to show that potential of a pullback. But on a monthly, you can see we're still just now coming out overbought. And so this is our weekly and our monthly are really showing that this may be the beginning of a pullback. How significant? We'll have to wait and see. Now let's switch over to the NASDAQ, which has a little bit more of a pullback. We've already broken, in my opinion, some key price levels here on the NASDAQ. So let's go ahead and zoom on in. Daily 2012, and there's our psychological 3000. And Friday's price action really brought us down below that and below the 50 moving average. And so now we really got to watch these two dojis right here. We really got to watch the wick below there. So that's 2950-ish, 2947-ish. We really have to watch that to see if we're coming all the way back down to this gap up here and this swing low here. So this is where the buyers came in and found value. So this is what we have to defend, or we're going to continue to move lower, which our daily is showing us. Weekly. On a weekly, we can really, again, see that sideways price action. But again, we can see the momentum on the NASDAQ more to the downside, not just sideways, but sideways to down. And really look at this on a monthly, which really, again, gives us a good visual. We'll start to see that not only do we see the side-to-side candles coming down, but this candle for the month of May is starting to take out the wonderful month of March. So definitely some weakness in the market, and we continue to look for that catalyst and that volume to keep us moving higher, but there's nothing wrong with the pullback. Okay, so as we begin to look at the market leaders, we're starting off with Apple, and we really see, again, what we saw with the S&P 500 and the NASDAQ, is that double top setting in there. You can see we got lower highs here, and we're coming to retest this 550 price level. If we break that, certainly got to watch what happens. I won't say look out below, but we certainly got to watch what's going on below. So Apple sideways, maybe even sideways to down. Amazon's going to buck the charts that we look at today because of earnings. You can see we go up. Why do we draw lines? Look at that. We had this gap up move here, and what do we also see? It came down and retest our resistance line here. So we held the resistance became support, but now we have some sideways price action. The market it held Amazon back, for lack of a better word. So Amazon sideways, I would say sideways up, but the way the market is right now, I guess I just wouldn't go long. Google's just a sideways, turning into a sideways mess. Looks a lot like the dollar. And gold sideways, stuck between 620 and 580. So I would say sideways. Goldman Sachs, financials lead the market, and Goldman Sachs is starting to head down. Real important that it holds this 200 moving average here for those who are long. But you can see these lower highs that we're putting in. We broke this key price level, 111, which was our last swing low a couple times here. So now, we're sitting at the 200. Will that hold up? Got a little support in here in 107, but just a little. So, it'll be interesting to see if we head all the way down to 100. Sideways to down on Goldman Sachs. IBM looks good, but like the market, putting in double tops here. Double tops. So a little weakness there. The real trade is down here below 195 for our longer term traders. A more aggressive entry coming in here at 200. Intel looks exactly the same. So definitely sideways. Maybe getting back into this range here of 27 to 28.50. Sideways for Intel. MasterCard was one of our better charts, but the market is starting to pull this one back. Some choppiness coming back into this choppiness area here around 420 to 440. Getting back into that range, sideways there. Netflix showing some weakness like Goldman Sachs. Made a move. Once it broke, look at this gap down, broke out of this range of 91 to 125, and now it's in the 73 to 91 range. And look at this. Friday's price action did break below that. Definitely got to look out below here. Some weakness there on Netflix. Finally, Priceline, which has also been one of our better charts. Again, putting in that double top. Real trades below 680. A little bit more aggressive entry, basically where we are right now. Sideways on Priceline. So nothing really bullish. The market has stopped at a lot of double tops being placed in. And again, what's going to be a catalyst to hold the market up? As we come to our educated spotlight, the question remains, what is your edge? Again, we're talking about high probability trading, and the biggest thing about high probability trading is knowing your edge. What is your advantage in the market? What is your setup? What is your time frame? What is your market? You have to know what your edge is to be a high probability trader. In other words, who are you as a trader? What is your specialty? What is your niche? What is your A game? You have to know what your edge is, where you're now leveling the play field, or as our picture shows, you're now stacking the game in your favor so that there is a positive expectancy, there is a more likelihood of your trades working. Of course, we know that doesn't always work, but we know that when you have an edge, and you know your edge, and more importantly, you're physically, emotionally disciplined to trade your edge, you're putting the market, you're putting the game, you're stacking the deck in your favor. Please comment, like, subscribe so you continue to receive our videos. We do have some more things coming up here in the summer. Having more time, we're going to have some more videos coming up. Let us know what type of tutorials, instructional videos that you would like, and we will put that together for you. And of course, our resources, our coaching, where we'll help you one-to-one sessions, learn how to develop that trader's mindset, learn how to define your edge. We'll help you through that. And of course, we have our full transparency managed forex accounts that we can help you with. And for those of you looking for the reason, besides emotional and the fear-based trading, we have a little stock trading tip for you, some free resources for you there also. But in the end, it's all about knowing your edge, knowing who you are as a trader so that you can pull the trigger in each and every trade. Thanks, guys, and I'll see you next time.